Hello everyone, I'm Marty and welcome to my December 2024 market update. I've got that cold bug that's going around, so if I lose my voice, I've got a bit of hot water here, which I'll make use of. I've got our friend the Grinch joining us for this update, and of course I have my festive ugly Christmas sweater on. It's not that ugly. A lot of work went into this from someone, but I'm going to jump right into our update, but only after I just quickly talk about this great book I read called The Infinite Game. You may have read it, from Simon Sinek. Excellent, talking about running a business, looking well into the future, not just at your current revenues and so forth in a company. And it made me sort of think about how we work at Pospisil Realty Group. And it's not just our focus on selling real estate for clients. It's actually rather having a just cause, as Simon puts it in the book, to provide the best support possible to anyone transitioning into a new home. Because changing where we live is probably one of the most important decisions we're going to make. And what we're here for is to help members of the community make that transition through education, which is what I'm doing right now, through professional services that we provide, and all the tools at our disposal to make that a successful transition. So I wanted to share that with you. A lot of thought went into that. It allows us to think from a more global perspective long term, and I think it's excellent to have that focus for every company. So let's jump right into the stats. 2025 is going to be a crazy year. We're almost there. This is the last month I'm going to be reporting stats to you for. So if we're looking at what's happening right now in the detached housing market and the sales ratio, we're at 19.7%. So quite a jump in activity for detached houses from this time last year. Benchmark pricing is up 1% from this time last year for detached houses, and prices over the last month jumped up 0.3%. Slightly, you can see in all product, very slight change from last month. Attached townhomes and duplexes, activity year over year is up 43%. Prices are up 1.8%, and from last month, 0.8%. Again, virtually the same from last month on that product. And apartment condos up 28% year over year. About a 1.2% drop from this time last year, marginal, and last month a very slight drop in pricing for condos and apartments. So relatively not much change in price over the last month. Year over year, we're seeing a little bit up from where we were this time last year, and a lot of increase in activity is really, really important to note, because that's revving up for that new year market. So here's the metric I use called the sales ratio, which tracks the activity or the absorption rate of various product month to month. If less than 11% is selling in a given month, it is what we call a buyer's market. There's downward pressure on pricing, and the buyers rule the roost, so to speak. Between 12 and 20% absorption ratio or sales ratio absorption rate in the market is a balanced market. It's not favoring the buyers or the sellers. But if we hit that magic number of 21% or greater being sold in a given month, we enter into seller's market territory. It's very exciting, lots of action, a lot of multiple offers, etc. There's upward pressure, of course, on pricing. So those are the different plateaus we look at when we're looking at how active the market is. And let's jump right into detached houses, Vancouver West Side. If we look at last month, we were at 10%, and for detached houses West Side this month, no change, still at 10%, still in that buyer's market, upper end of the buyer's market range for detached houses West Side. Condos, townhomes West Side, last month we were at 22%, fairly active, slight drop this month down to 17%, so we're now in balanced market territory for condos and townhomes on the West Side. If we go to the downtown area for condos and townhomes, last month we were at 13%. This month, no change, still at 13% in balanced market territory. Over on the east side, detached houses, how active were we? Last month, we were in that balanced market range, and this month we're still at 13% in balanced market territory for detached houses. And of course, condos and townhomes were super hot last month. ending off at 26%. A lot of product selling in the east side for condos and townhomes. This month, just a slight drop down to 25%. Still super active, still in seller's market territory. Upward pressure in those east side strata units. Okay, look at overall in BC, the sales ratio. Here's the balanced market range. Here's buyers, here's sellers market. You can see it's been increasing through that balanced market range, ready to jump into sellers market range. What's happening with prices? Okay, Greater Vancouver, looking at the average price graph. We can see houses are fluctuating around 2.16 million, townhomes around 1.24 million, and condos around 785,000. They're all fluctuating around where that peak pricing was very recently. Not a lot of change in pricing, couple of dips and increases over the summer we've seen in the pricing, and that's reflected also in the 5-year trend. Here we were back in that peak of May of 2022. We had another increased activity in July of 2023, and of course earlier this year in March and April we saw that peak here. We're pretty close to those peaks for townhomes, houses, and condos if you draw a straight line, so prices are going to jump up and make that little difference very early on in the new year. So forecasting for spring of 2025, what's happening? I got the Grinch there waiting in great anticipation of what's going to happen on Christmas Day and what he's going to do. Great show. Now there's 3 of them. Of course, it takes a lot of time over the holiday season to watch all of those, but we do. Anyways, today's market drivers. We've got market enhancers and market price deterrence. And if it's transitioning, we're in orange between the two. So market enhancer, consumer confidence, buyer demand is certainly there. People have been buying. They're buying really good value. There are not as many buyers over the summer as there normally would be, so that pent-up demand is ready to pounce in the new year. Inflation, of course, we're between that 2 and 3% Bank of Canada happiness band, I call it, so that's good news. And the cost of borrowing is, of course, falling. It's becoming more affordable. We're in transition in orange. We're hoping to see some more rate drops, and we're going to see those being announced very shortly. I'll jump into more detail there on that. Inventory levels are holding pretty steady. There's been some slight drops as we see normally in November, December. Not a lot of listings come online then. So those drivers are all good. Consumer confidence, let's look at unemployment. Boy, I was just pointing back at that 14% unemployment rate back in 2020. In Canada, we're at 6.5%, BC 5.8%. Not a lot of change there month to month. Retail sales are up, and of course they will be for December. Let's look at rental rates. We're down about 6% from last month at $3.21 a square foot. Not a lot of difference between furnished and unfurnished rentals. Used to be a big difference, about double, but now that is virtually the same. You can see the rates have dropped for all 1 bedrooms, 2 bedrooms, Vancouver, Victoria. The rental rates are becoming a little bit more reasonable there, so that's good, good to watch. We're looking at under construction and completions, very high under construction, a lot of product being built, a lot of activity towards next year. That's a good sign. And if we're looking at inflation, currently in Canada, we're at 2.02% inflation. That is an increase from last month at 1.64%. Pretty well welcome because we didn't want that drop to continue and inflation to continue to go down. Tiff Macklem there holding the market has the target rate now at 3.75%. And that, of course, whenever it drops, it's an immediate benefit for the variable mortgage rate holders. And of course, when the 5-year bond rates drop, that will impact the fixed rates as well. And borrowers are getting ready with those continued rate drops. And I got an interesting info that came out of BMO Economics, which I'll share with you shortly. The 4th rate cut, hopefully a rate cut, will come on December 11th. So be ready on December 11th. The Bank of Canada announces that rate announcement. Will it be a jumbo or a regular? It's probably not going to be a jumbo. Probably, hopefully 25 basis points. Let's see what happens. Now, there's a new player in the game. I'm calling it the Trump effect. And he is, of course, threatening to have 25% tariffs on all imports from Canada. Now, okay, that's interesting, but how does that affect the real estate market? That's why you're watching this video. Well, there's 2 things. it could negatively impact our economy, and that could bring bond rates down, which would in turn bring interest rates down, which could make mortgages cheaper. So that's good news. But on the contrary, if we get into a war, then inflation would rise, and that would weaken the loonie, and then we might have a tightening of fiscal policy, which would of course increase the rates. So it's really hard to say what will happen. Probably best that those tariffs don't come in. We'll see what happens. Okay, consumer price index, you can see we're within that happiness band between 2 and 3%. We're right here at 2.02%. That's excellent. So all good news there for inflation, consumer price index. Are we in sync with our neighbors? Canada inflation rate, of course, is 2.82. That's up from the 1.64, 1.65 last month. And the U.S. inflation rate is at 2.6. Pretty darn close. Jerome Powell there did increase, the inflation did increase, which caused an overnight rate of 4.58%. So the bottom line here, what we're comparing 3.75 to 4.58, we're pretty close. We are in sync with the U.S. We don't want to get out of sync because that has negative repercussions for our economy. So Bank of Canada, we're hoping, is going to continue to drop those rates. We don't want to go to zero. We do want to get to that neutral range between 1 and 3%. That's their goal. And we, of course, still want economic growth. We're trying to hit 2.1% for next year and stave off any negative impacts in the economy. We don't want to lower the rates too quickly because then the loonie might weaken. And of course, that will result in inflation. That's not good. And we want to keep in sync because, again, that has negative repercussions as well. So all of these things the Bank of Canada is balancing to make the best decisions for us, of course. But this is super interesting. Mortgage rates have fallen now from about 6% to the mid-4s. You can get a good 5-year rate at 4.3, 4.4, 4.5, somewhere in there. But the Bank of Montreal Economics released a report that says that triggering interest rate of 3.9% is where buyers will step back into the market. And I think they're right. Psychologically, you're below 4. We saw interest rates in the 2s and the low 3s. When we hit 3.9%, they're saying a lot of the buyers are going to jump back into the market. So if you look at it, a 3.9% mortgage coupled with that new 30-year amortization, which is coming online December 15th, will result in the same pre-pandemic mortgage levels as a percentage of household income that we saw earlier when the market was so active. So those two things combined will bring those buyers back into the market. So that's good news. So these are the mortgage rules I was mentioning. I talked about them last month, so I'll do it quickly. We're increasing from $1 million to $1.5, the price cap for insured mortgages, and we're allowing pretty well all buyers, investors, even in pre-sales, to take advantage of that 30-year amortization, which lowers your monthly rates or your payments. And that's important. That takes effect December 15th. So that's a positive thing, coupled with those rates coming down, positive impacts on our market. So cost of borrowing, again, if you look at the trend, you can see the variable and the fixed rates coming down. That's increasing the activity in the market. If that continues, very important factor. It does three things. The lower rate makes more affordable homes for buyers. There's more selection. Lower rates means their monthly payments, of course, come down, increasing the amount that a buyer can borrow. And they qualify for a higher mortgage. It increases their price range and options. So all good news for buyers. So buying power for today's cats, there's the PRG cat holding his cash in hand, ready to buy some property. If we look at, say, a 4.25, a 4.29% rate, and even using just a 25-year amortization with monthly payments, that's going to cost you $542 for every $100,000 borrowed, or if you're borrowing $1 million, quick calculation, $5,420 a month to finance $1 million mortgage. That's kind of a handy tool to carry around when you're looking at property. That's down from $550 a month, so things are getting more affordable from an interest rate point of view. Inventory levels I won't spend a lot of time on because they're decreasing, of course, as we're in November, December. That's typical for this time of year for houses. Condos, townhomes are seeing a decrease, even on the east side. The number of listings are decreasing, fairly typical for this time of year. No dramatic changes. Active listings overall in the province have increased dramatically and have leveled off over the summer. So this is what you're all waiting for. What's next for prices? So if we look at the increase in activity across BC just in October, we can see there's a lot of demand waiting to take off next year. You can see the forecast for next year is more sales compared to this year. I think it's going to be more dramatic than that, especially if rates continue to drop. So in conclusion, the forecast, we know our market is impacted by mortgage rates, inventory, and consumer demand. And mortgage rates being a biggie. The inflation is within the Bank of Canada happiness zone, so that's good. Mortgage rates, as you remember from that BMO economics report, if they're right, and I think they are, we hit 3.9% mortgages. That's going to bring a lot of those buyers back into the market. So we really only need another 30 to 50 basis point drops to bring those variable rates. If the bond yields drop, then we're going to get those fixed rates dropping as well. That's good news. So everything's looking pretty good. Inventory is holding steady. That's good news. So the mortgage rates are very close to allowing those buyers to jump back in. The pent-up demand that took place all summer long is going to jump back into the market. There is some political uncertainty down south that's going to impact us. We're watching that very closely, but buyers and sellers in general are waiting for another drop or two, and then it's going to break loose. So buyers are at the starting gate, and the starting gun will be another Bank of Canada drop. That's going to really get things rolling. So for 2025, it's going to begin with great anticipation and excitement. I would expect widespread price gains throughout the year if everything goes smoothly and as predicted. Some more happy clients. That's my December 2024 market update. You can watch the videos. There's the Grinch pulling down the Instagram site, YouTube and Facebook. Of course, you can listen on YouTube Music, Apple Podcasts, or Spotify. That's my market update. And from all of us here at Pospisil Realty, we wish you and your family happy holidays with great health, lots of happiness, and we wish you all great success in 2025. I'm Marty Pospisil. Thanks for joining me.